Hello, everyone, and welcome back to another edition of the Daily Crypto Byte. Today is Wednesday, September 8th, and as you can see here, we have a very special guest, the one and only Rob from Digital Asset News. Very excited to have you on today, Rob. Thanks so much for joining us.
Yeah, man, anytime. I love coming on the show. I love just the low-key feel of it, especially in this crazy, crazy market. So thanks for not being sensationalisms.
Yes, of course, and we're happy to bring your mellow tone to the channel. You fit right in here, Rob. And like you said, it's been a crazy week, and we got plenty to talk about. So what do you say we dive right into things here, guys?
How about it? You know, why don't we start off with some liquidation data, because that really sums up a lot of what's happened in the last 48 hours. John, you said you had a couple slides you'd like to share. You want to jump in?
Yeah, love to, big guy. Here we go. Let's see, share screen. Share. All right, there we go. So this is just one of many headlines from yesterday. As those of you who were watching live remember, we were up near 52,000 for Bitcoin. And everything seemed okay with the world at that point. But apparently, an awful lot of folks were really levering up on the long side. Now, on the plus side, because the reason they were doing that was, of course, at least one of the reasons was El Salvador. Second reason was probably Brazil. They knew that both in the case of El Salvador, if you had the wallet designated by the government, they were going to drop $30 worth of Bitcoin to every citizen. And then Brazil, a lot of the cryptopreneurs in Brazil decided, hey, let's show support. Let's buy $30 worth of Bitcoin as well. And we all kind of saw that things were leaning pretty strong to the bullish side of the ledger. Well, as always, when people get overly bulled up, we're usually good for a fall. We talked about the crypto greed and fear index. And, for the last, since April, when it dropped precipitously into the May timeframe, where we were seeing regular readings of the fear and greed index down in the 15 to 20 range, 15 maybe to 25, let's say. Mm-hmm. Very bearish. They were showing a lot of fear, which, again, contrarians like us, we like to play the other side of that, Rob. I know I'll give you plenty of chances to opine on that. But conversely, when everything's going great and the greed index averaged, between 75 and 80 for the month of August, people just figure that goes on forever. They don't want to view, they want to view the one side as, well, this means that it's oversold. And they want to view the other side as, this will keep going forever. Not that they should take profits at all or anything else. But Monty and CJ were indeed saying people should be careful, take some profits. Well, people levered up, meaning they either bought too many coins offshore where they could get up to 100-to-1 leverage, or they shorted puts. Both of those came back to haunt them. As you see here, Bitcoin crashed $7,000 in a matter of minutes, 2.6 billion in liquidations. And then this tweet from Crypto Differ shows that Bybit was where the bulk of those liquidations were happening. A total of 3.5 billion, but on Bybit, it was about 35% of those liquidations. Hubei, Binance, OKEX, FTX, BitMEX, many of the usual suspects where people will use leverage and in some cases abuse leverage. And once that thing waterfalls, those liquidations happen like that, light speed, because if you've got a $10,000 account, you're levered up to trade it 10-to-1 like a $100,000 account. So instead of just having $10,000 worth of pick your coin, you've got 100,000, you get liquidated fast. And guys, that's what I think happened yesterday.
God dang it. You know what? Yeah, you know what? I see this. I just took a screenshot of this. I'm gonna steal it for today's show.
I'll send it to you, Rob. But
yeah,
sure.
Well, thanks. And I'm looking at that. I'm like, it's always the same, like you said, the usual suspects, and it's always Bybit at the top, and you got some other people in the middle, and you got BitMEX down there. But it seems like all the liquidations are happening at the very one place, and it's Bybit. And why is that? It's because all the newbies and all the people that get sucked in like lambs to the slaughter are getting pushed there by people, whoever those people are, and they don't know what. I don't want to say they don't know what they're doing, but a lot of people don't know what they're doing. And because of this problem that we have, it's almost like, and I know that Sam Bankman-Fried talked about, and he's like, you know what, leverage trades are not the big thing. That's not the big issue. It's not the big issue when you know what you're doing, like you guys, but when we get these new people in 10, 50, 100x, and before you know it, everything gets liquidated $2.6 billion. Now this whole market that we're engaging in becomes one of those markets where it's like, hey, this is just a bad place. This is a scam. This is a fraud. I lost my money. No. That's not what it is. You just don't know what the heck you were doing, and you need to stop doing those things unless you are a seasoned trader like my man CJ Monty and the liquidator. And that's what I see, and it frustrates me because I talk to people about this, but it is what it is. What do you guys think?
It's interesting because Monty made this point just before we started the show as well, is that this kind of happens in cyclical nature. We have like an optimistic phase in which, money is made, people get, back into the profits, and then they start levering up. And we have, one large order that hits a lot of these liquidation stops, and then it leads to these cascading waterfall candles. However, historically, when we see mass liquidations, kind of accumulating BTC for the long term shortly after those periods of mass liquidation has been a rather viable strategy. Of course, to your point, Rob, it does hurt a lot of people emotionally. It reminds them of pain, so it doesn't make them want to jump back into the asset immediately. Nevertheless, I think that these do provide good opportunities for larger institutions to have that entry liquidity for potential reaccumulation. But I'll leave it with that.
Yeah, CJ, that's a great point. And I want to toss a question to you, Rob, about that sort of reaccumulation. I know you're a trader or investor that has a longer term time preference when it comes to crypto. You're in this for the long haul. So I'm just curious kind of how you've been seeing this sort of black swan event. Have you been seeing this as an opportunity to accumulate, or have you kind of been waiting to see how this plays out over the next couple of weeks?
So funny you should ask. So today I woke up at 2:30 in the morning, right? And I'm just like, I'm sure the market probably recovered. I roll. I'm like, God dang, it didn't recover whatsoever. So I'm looking at this, and I'm looking at the different cryptos that are really down big. Like Solana was on a massive tear, right? 19%. And then you had Cardano down almost 20%. Then you had Chiliz down 18%. Then you had Polkadot down 21%. And then Polygon down, I think it was almost 22 or between 18 and 22%. I'm like, I can't let this pass. I can't let these opportunities pass. So at 2:30 in the morning, I'm in bed. I'm trying to wake up my wife. I'm doing all the things on Voyager because Voyager is up, and I'm pretty happy about that. Anybody who's like, and before I go on, like some people were complaining that Voyager was down. I had to update the app itself, and it worked just fine. So I'm there, and I'm buying. And usually we talk about buying the dip, but it's one of those things where, like, if you're looking at this, you get a little scared. You're like, wow, this really did drop pretty heavy. So for everybody out there who's like, I don't know if I'm going to buy this dip, because in May we had a dip and a dip and a dip and a dip. So my resolution to this was like, I got dry powder, like CJ always talks about. Thanks, CJ. I took a little bit of profits, and then it's just sitting on the sidelines. So I'm just going to divide that up into thirds or fourths and just start buying dips as they go down. And that was my resolution, because it worked pretty well in May. It'll probably work again now. Not investment advice, just investment opinion. And then from there, I'll just see how things go. But in the long run, if we're talking about 6 months, a year, 3 years, and 5 years, just when in doubt, zoom out and you can take a look at the actual charts. You're in a pretty good place if you're watching this video right now. And that's just what I am doing, not saying what you should do.
Absolutely. And I think you made a great point there, just talking about zooming out really provides perspective. And I think in this case, with this black swan event, you really don't even have to zoom out that far to see that this could be a good price in terms of, price action over the next just few months here. But you mentioned an asset there, Cardano. I know you've been a Cardano bull for a long time.
Yeah.
You also talk about the concept of investing in people. It's a strategy you've successfully employed many times. But I want to ask you, what is your thought on Cardano currently with this big Alonzo fork coming up, all this development about, the rubber's about to meet the road here. Lots of FUD going on Twitter. So I'm curious to hear your thoughts.
You know what? It was something Jon just said, the liquidator. And he just said, you know what? He goes, some people will think that things are going to go up forever, and they don't. And he's completely right. And it's one of those things, like, my natural exuberance sometimes gets ahead of me. And I think Cardano's going to go, maybe up to $5 for this bull run. Some people think more, some people think less. But when I look at these things, there's the buy the rumor, sell the news. And I think that's what happened with El Salvador. I think a lot of big people will just say, probably look at that and go, we know a specific date and a time when this is going to happen. Let's just, at some point, just start selling off. We trigger some things before you know it. There's a massive wide sell-off and liquidations happen, and we're in the good. When we see that the Alonzo hard fork is coming up with smart contracts on September 12th, that is a set date and time when people can look at that and go, you know what? That is a perfect date to start dropping things like crazy. So if we really think about buy the rumor, sell the news, and it happens again and again and again, maybe that is a good time for people to take a little bit of profits. I'm not saying, again, I'm not telling you what to do, but it would really stand to reason. You can't, and if you look at some other big events that have happened, like with the car salesman, as I call him, when he sent out tweets, for Tesla and saying, hey, I'm going to start to accept Bitcoin. We're going to do things with payments. You can't time that. You can't buy that rumor, sell news. It happens right at that point. But these hard dates, El Salvador, hard forks, things coming up, you can do a lot of things. And the only thing and so there's that part to it, but there's a flip side of that. Look at Solana, all the different things that they had coming up, all different things. And it seems like that didn't really matter, and people just kept buying it. And the only time it took a big red candle was this morning. So it's just one of those things where if you think it's going to go down, maybe it will be a good idea to take profits. But in the long run, I think Cardano is going to do some pretty good things. And even that FUD with the UTXO and everything going on with that. As I was talking to Hashoshi, who's a developer, it's not like that was done through Cardano. That was done through Adapt, because it's the test net. And they've looked at it and go, you know what? It's not an issue. We're going to keep going forward. So we'll see how it all shakes out. But I'm still pretty bullish on it, but we'll see how it goes.
Rob, you also mentioned you want to talk a little bit about NFTs.
Yeah.
Want to explore that territory, my friend?
First of all, Diesel King, thank you. I have a little bit of wisdom because I've lived a long time. That's the only reason. And
God, you've lived a long time.
That's it, man. So NFTs, let me just get a general consensus about you guys. How do you guys feel about NFTs? Do you feel like it's just like a JPEG that people are downloading, and it's just like a Pokemon card, or is it something more than that? CJ, Monty, Jon, what do you think?
I mean, I'll just quickly say, I think it's something more than that. I think we're seeing a ton of mania right now, and that's the current application.
Yeah.
But I think that's just a representation of the recognition that there is tremendous potential in this space for applications beyond just art and JPEGs. So right now it is, kind of hype fad-ish in the space, but I think that down the road we could see some real true potential.
Yeah, sure. CJ, liquidator.
Yeah, I'll echo Monty's sentiment. I think that music licensing could be an interesting field for NFTs. There's a lot of inefficiencies for artists right now. I think what you're seeing with, penguins and bulls being, half of Twitter right now is just, it's not necessarily a bubble. It's just that a lot of people made a lot of money in crypto very, very early on, and they like to spend money on JPEGs and NFTs and that sort. But I don't think we should try to understand the art world, because if you go through history and you look at various pieces that have sold at auction, so I do expect that type of subjective value to remain in the NFT market as well. And you see this with collectibles. Just ask Monty about that.
Yeah. very true. I think Rob, that NFTs are in some of those NFTs that you talked about, for instance, the Rock or any of those other things. And I don't mean Dwayne Johnson, but the pixelated rocks and things like that. I don't know if that really has that much of a value. I know the guy that bought one of those first rocks when it came out. Now, there have been many since then, but he bought one of the first rocks and paid $50,000. He sold that rock for over $270,000. So when people hear about purchases and sales, in other words, full trades for NFTs, then they kind of figure, okay, hot potato. Yes, I would say it is a hot potato in the case of that rock. And I noticed, because yesterday, Rob, we were doing a lot of work on Lollapalooza and Solana, which you already mentioned. And they were a big part of Lala. And the stock was up 6% when they did their first Perry stage sponsorship. And then it just took off after that. For a whole host of reasons. It wasn't just the sponsorships at Lala, but if we wanted to look at that. Now, when you go to Solana, one of the things that they support there are NFTs for Lala. And a poster for Lala started at, I think, $1,000. Some have sold for over $20,000 already. And then they have signed posters, NFTs. Again, all of these are NFTs. It's nothing you can hold and touch.
Right.
But instead, just these non-fungible tokens. And they have signed NFTs that have traded, I think, for 6 figures, perhaps, or at least pushing 5 figures hard. And, am I to say that that's any dumber than somebody stapling a banana to the wall and saying that's art? Because, of course, that happened at Art Basel 2 years ago.
Yeah.
Beauty's in the eye of the beholder, but I do think many of them are hot potatoes, and I'll leave it there.
Yeah. And then just if you look at art, look at that Banksy painting that was shredded after it sold. Well, it just sold again, and someone paid for that. And
someone paid more for it because it's shredded.
Exactly. So it's crazy on that part. But so when I look at NFTs, I just think to myself, it's kind of goofy because I think, well, it's just art and whatever else. People are just paying for JPEGs. But then I was watching a couple different videos and different people who are really into it. And you know how we can evaluate a company like the Warren Buffett style for fundamentals and just kind of take a look at it, the spreadsheet and things going on. So, okay, we can evaluate that. And with cryptocurrency, we can evaluate and see, okay, well, let's see what the community is like, what the tokenomics is, what the utility are, and what the people are behind it. We can evaluate that. But with NFTs, when I was listening to this video, they started to get into it. They go, there was a couple different ones that it came out, and it was created by the guy who was the first person that created Vine. Remember those social media Vines? Well, he created some NFTs, and he said the reason why he got into it was because of, one was the community, and the community behind the NFTs is this growing bustering thing. So when he actually bought the NFTs, he was able to get that on the second market. And the very first one, he said, I'm not going to buy the most expensive ones because it was just for an expensive part. And there was very few of them, which is like the exact opposite of like tokenomics, right? We want fewer tokens than more tokens. But then he talked about, well, now that we have these NFTs and they're on Solana, they're on different places where you can actually get them and don't have to mint them for a boatload of money. And they actually went from like 1,000 different NFTs in the series to like 100, 250,000. He goes, well, now it's open up to everybody. And then that community actually expands. And then the NFTs that more people can buy, and then they can buy more so in the secondary market. He goes, so if you take a look at the community and how many of the NFTs are, you can kind of evaluate what the NFTs are going to do and go from there. Now that takes a lot of research, and you got to be really in, we have crypto Twitter. Well, there's NFT Twitter essentially. And if you can really be in that space, you can kind of figure out where the next big thing is coming. I don't have that time or patience. And that's why I rely on smarter people like these guys. But that I thought was a pretty interesting thing where you can actually evaluate what an NFT could actually be. And then later on, who knows what it's going to be for like, for like putting like mortgages and properties and different IP or intellectual property on as far as an NFT, and then actually be there in the blockchain and go, I own this because it's here on the blockchain. You can prove it as opposed to just downloading a JPEG. So I see it as a big thing. And this is like in the internet. Who knows what the heck it was going to be until it actually became what it is.
Yeah, that's a tremendous point, Rob. And to that point, I don't know if you guys saw, Steph Curry yesterday tweeted that he was interested in crypto, and then immediately today, that was what was so interesting about it. He tweeted that he was interested in crypto, and he's like, "Where should I look?" And if you look at the replies, it's these NFT communities, essentially shilling their projects to Steph Curry. But today, his profile picture is a degenerate ape NFT. So he bought an NFT, paid $150,000 for it. He also got sponsored by FTX in a matter of 24 hours after showing interest in crypto. But I thought that was really powerful. The fact that degenerate ape ended up winning out because their community was so vocal in his replies. And, his speculation in that asset really drove the price of those up today. So really interesting. I think ties in well with your point there, Rob.
Yeah. And so like there's all these great things going on. So my next question for you guys would be, where are we going? Like, I mean, we just saw this huge sell-off. We saw these massive liquidations, and people are asking me, first of all, they're asking me two things. Where the heck are we going? I'm like, oh, I don't really know, but I got smart guys who know. And the second thing is manipulation. I'll ask Jon that specific question after we talk about where things are going in the next week, month, Q4.
I think we go significantly higher, Rob. I think that in all likelihood we'll be a lot closer to 70 or 80,000 at year end. I still think that the Red Pill podcast with Max and Stacy, I think they're smoking some of the good stuff. They say that we're going to see 200,000, and I know that. Oh gosh, which one is it, guys? The stock to flow model. If we don't hit 100,000, he says the stock to flow creator says it's invalidated. Maybe we get close to that. I don't really know. Obviously none of us have the crystal ball. I do know that if we're looking at it in terms of overlaying 2017 and some of those things, that we can see a fourth quarter that causes us to be, anywhere from 2x to 10x where Bitcoin is right now. I'm not calling for either 2x or 10x, but I think we could easily be 1.5x and push towards 75 by year end.
I'll take it. CJ, Monty, what do you guys got?
Monty?
Yeah, I just want to share this chart real quick because I'm seeing parallels now to what we saw in about November of 2020. And this was a period of time, look back before this red candle here. We were seeing sustained positive price action. The same exact conditions we're seeing now that led to that all-time high in leverage entering the market. And price was driven down. Here was a move from 19K to 16K, a very sharp move that shook the leverage out of the market. And at this point here, we saw a ton of institutional interest start to flood into the space. We saw it here at the beginning that kind of bolstered this rally. But once the retail hands were shaken out, that's when we saw announcements across the board from companies like Grayscale and a bunch of other institutions. Even we had Tesla putting Bitcoin on their balance sheet, those sort of things that really drove price up. So I'm seeing something comparable at our current point in time here, where we're kind of having the leverage shaken out of the market, but that's going to be the cue for the institutions to really enter back in before this final leg up. So I think it is kind of analogous to what we saw in the end of 2020, and I'm hoping we get that same sort of institutional interest to close the year.
Nice. CJ?
Yeah, it's always interesting after we have these large liquidations because they typically lead to what is known as like auto rallies. Doesn't mean it has to happen, but like a short reaction rally after all that sell pressure. And, I think the trend's been like critically hurt in the short term. The sense that it may take a couple tests of the lows, perhaps at 42K. I'm not, I think this is like the worst case, like the bearish case. But nevertheless, I think we're going to see accumulation. I think we're going to see continued outflows of Bitcoin leaving exchanges and longer term investors accumulating more BTC for the end year predictions of stock to flow. So I think it's going to be interesting here. October has not been a great month historically for the stock market. We'll see if that affects Bitcoin. Nonetheless, I think we are poised to go much higher towards the end of the year. And if it's not, 6 figures, potentially 80 to 90K, I think is a feasible price prediction, because like Bitcoin can just grind along and then do 100% in 1 month. So, things could get interesting end of year.
See, and that right there, so that Bitcoin can do 100% in like a very short amount of time. It's like, that's what I look at when, like, going back to the Cardano analogy, when we talked about like what's going to happen, buy the rumor, sell the news. At that point, in September 12th, you really got two options. Well, you got three really. You can sell, you can hold tight, or you can hold tight and buy. And I think for me, when I see those dips happen, that's another opportunity for me just to accumulate. I probably won't sell any of my Cardano beforehand, even though I probably should. But remember, every time you sell, what do you got to do? You got to pay taxes. And depending on what bracket you're in, just expect that at 20, 23%. So if you want to take that and then pay the taxes later on, unless you got some way to offset it, so sure, whatever else. And then the last, I just have one question before we move on, and that's about manipulation, because everybody's asking me about this thing. First of all, where are we going? So thanks, everybody, for answering that question. I'm going to steal both of those charts from you. And then the second thing is manipulation. We talked about the president of El Salvador. We talked about, institutions and all the different things that are going on. John, I got a specific question for you. Back in the day, when you were, you're still doing huge amounts of trades. You are pretty much an insider. You know a lot of the big people in the financial institutions. Back in your day, did you see any type of manipulation going on that you could, and not to incriminate yourself, but anything where you're like, that's a little bit sketchy? Because people don't believe me that there's actually manipulation going on. I'm like, look, JP Morgan just spoofed the metals market and they got busted for it not too long ago. So just take that as an example. And then don't get me started with the banks and Wells Fargo and things like that. So John, any kind of stories you can share with us?
Sure. I won't share names, but I'll show stories. I'll share stories.
Perfect.
There have been plenty of times when, just as you mentioned about spoofing, and the practice of spoofing, folks, that Dan knows, Rob knows, that Rob knows, is when you basically stack one side or the other. If you stack the bid side and spoof the market into thinking there's a massive buyer coming into the market, and then you cancel all those in fractions of a second, but the algos that see those big stacking of buy orders coming in then lift all their offers. They get out of the way because that's what they're programmed to do. So when it was human beings, you did see spoofing back then too, but spoofing in the age of trading at nanoseconds is much more widespread and much harder to catch because so many of the high frequency shops aren't necessarily spoofing. They are indeed trying to cover, and they might be hitting the market with a lot of buy orders because they need them. And then the regulators might actually see all those bang, 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 and then they get canceled because you can cancel so fast these days. And only about, I think I saw this yesterday, Rob, and I retweeted it, only about 55% of the AMC trades were actually hitting the lit markets, meaning the markets that we can all see rather than dark pools and off exchange trades. So that's a lot. When you've got 40+% trading off exchange or in dark pools, it has that same sort of manipulative effect because you're not seeing the whole picture. And the single best example of manipulation, I'd say, was they used to try to, on the final day of expiration, they would try to run the market in one direction or the other, which is why they've separated now on triple witching. It's not really quad witching anymore because Some of those expire on the opening prints. That's the S&P 500, and the OEX, or the 100, trades throughout the day and expires on the closing prints. When all of it was on the closing prints, they thought the temptation and the ability to manipulate that final print, which could be, degrees above what the actual market was trading at, because if you slam in a bunch of market on close buy orders and you buy a bunch of calls just before you did that, it's a self-fulfilling prophecy. You're driving those calls deep into the money because you have enough capital to push it that way. And so for that reason, they separated morning versus afternoon on the triple witch, or on, the June, September timeframe options.
And then real quick, what kind of volume are we talking about? Because if you're talking about the traditional stock market, we're talking about trillions and trillions. Is that what we're talking about? Because in this market, 2 trillion, that's it.
Right. And so as you might imagine, it's a lot easier to catch a bunch of leveraged apes in a $2 trillion crypto market than it is on the multi-trillion-dollar stock market. You're absolutely right. Although the final numbers that we routinely see on expirations they don't get anywhere near the trillions, but it's not uncommon to see 5 billion or 20 billion in market on close buy or sell orders. And usually that's tied to futures. It's not, they keep a pretty close eye on whether or not those are just trying to manipulate price up.
Gotcha. Scary. Okay, so everybody listening home, that's exactly what you got to. That's what you're dealing with. If you want to try to front run that type of action, good luck. Anyhow, yeah. CJ, Monty, you got anything to add on to that crazy story?
No, not much. Thank you, Jon, for sharing that experience. I mean, we see some crazy stuff in the crypto markets, but even still, it pales in comparison to some of the stories I've heard from you. So thanks for sharing. But I think that's about all the time we got for today. Rob, I want to thank you so much for coming on today. It was a pleasure speaking with you, as always. And anyone that wants to hear more from Rob, I very much encourage you to head over to YouTube, check out his channel, Digital Asset News. He breaks down stories into bite-sized pieces, and it's quality every time. So thank you, Rob. We really appreciate you coming on today.
Thanks for having me, guys. I appreciate it.
Thank you, Rob. Well, CJ, Monty, remember, guys, you can always go to Voyager, and if you type in Rebel25, you'll get $25 worth of Bitcoin just for signing up, because they are a sponsor of the show.
That's right. And if you want to come hang out with CJ and I, you can try the crypto room for just $1 for the first month. We share actionable trade insights with entries, exits, stop losses. Got a 24/7 chat with traders from all around the world. We publish news, have an education curriculum, and a whole lot more. So come over there and check it out. You can try it for just $1 for the first month. And markrebellion.com/try crypto. But that's all we got for today. Once again, Rob, thank you so much for coming on. And thank you, everyone, for watching. Have a great rest of your day, and we'll see you again tomorrow.
Thank you.